You named three pretty big areas of tech. Let's just specify for a second. I want to start with chips. Where do you see the opportunity for chips, especially as we look ahead to Micron earnings on Wednesday?
Yeah, so Micron earnings are Wednesday. We like, these chips have been beaten up pretty hard. Certainly the most sensitive area of technology to the economy. The SOX index is down some 33% year to date, whereas the S&P Tech index is down maybe 25%. So Micron reduced DRAM and NAND wafer starts not too long ago to right-size supply. We think the deterioration in memory conditions is pretty well understood by the street, and more important to investors is when a cyclical bottom is established. Our take is the industry is probably closer to a trough than to a peak, and we think Micron has improved its positioning to that end. And the downside here, somewhat limited, book value right around the mid-40s.
Right.
We like the stock here going into the print. We feel like risk reward, it starts to look much more compelling at these levels.
Yeah, I want to ask you a little bit more about that memory part of the chip sector. Obviously, a lot of weakness. We've seen a lot of push or pull forward of PC sales, which have kind of hampered, the outlook as far as 2023. But we're also seeing a big ramp up when it comes to electric vehicles. Things have slowed down a bit due to declining gas prices, but isn't just this big macro trend of more and more electric vehicles? We're seeing double-digit growth in France, double-digit growth in Germany. Here in the U.S., a slower story, but isn't that really a very bullish sign for memory chips?
Yeah, I think that'll into next year. I think that starts to play into the bullish sign. I think currently the macro backdrop is just overpowering what company fundamentals are. I think that the Fed and the inverted yield curve, and I think rates where they are now has just taken precedent. And I think the tech sector has gotten so beat up this year. Looking into 2023, we feel like we can get a little bit more bulled up in technology stocks. We think semis, one way to play that. Within the semis, we like Micron.
Yeah, but when, Sahak, looking more broadly, back up with me for a bit here. We're just mentioning Salesforce's Mark Benioff a couple days ago was saying, all those new hires we made, they're not as productive as we'd like. Let's get some ideas about what's wrong with productivity. To me, it echoes what we also heard from Google Alphabet's CEO, Sundar Pichai, last year, saying productivity, we need 20% better productivity. That sounds to me like they're perhaps looking for excuses to have to cut in the beginning of 23. And I'm not sure the sort of pessimism that implies is priced into the market. You think it is?
Look, the job cuts, we've seen that certainly intensify going into year end. We think next year that's not going to wane. And I think that for the time being, the job cuts and the softening labor conditions will be viewed as near-term bullishness for tech and the tech complex. The entire tech complex hired so aggressively since the onset of the pandemic. We're seeing the opposite effects of that today. And for the time being, bad news seemingly is good news. And going into next year, I think we see more of that.
So, Sahak, I want to look at some good news that was just flat out good news. Last week, Oracle and Adobe reported earnings. You're pretty bullish on those stocks. What did you see in those reports that makes you bullish for them going forward? Was it the AAR? Was it some other demand number? Or was it the commentary on the calls?
Commentary incrementally getting better. ARR numbers have been improving. Taking a look at, other names, within our complex that we cover within big tech, Microsoft comes to the forefront. Being able to buy a big tech company like Microsoft, price earnings relative to growth, we think makes a lot of sense here. The Azure guide did disappoint investors most recently. This has been taken down. We think the cloud and underlying PC market have been so weak coming out of the pandemic. A lot of this is priced. We think the cloud and underlying Office 365 and Windows ecosystem will comprise a bigger price of the company going forward. And this should, spur growth and margins. And we like it into, the next calendar year. And we think that a lot of the valuations have come in such that many of these make sense and risk reward starts to look much more compelling. And given where we've come from the beginning of this year, we just don't want to stay too negative in the tech complex at this point.
Sahak Manuelian of Wedbush, we really appreciate it. Thank you.